All right, good morning, traders. Today is January 21st, 2026. My name is Coach Carignan. I'm the lead instructor here at the BYOB Trading Room. It's a day trading division of the Hit and Run Candlesticks family. Thank you, everybody out there in podcast land, digital land, cyber land. Thank you for subscribing to my content, following my content, liking my content, leaving kind words on my content. Special shout out, Bob Jordan, John Jordan, Kathy Sour Roasted for sharing the content. Appreciate that. Love that. Helping spread the word out there to the trading community. Appreciate that. All right, let's just drill down before I get going. Got a few announcements. Got one announcement. Tomorrow, members only. This is the benefits of being a member. We got member e-learning tomorrow. You're going to get our presentation from Doug, myself, and Rick. Each of us do about a 50-minute presentation tomorrow on option basics, using calls, puts, and basic strategies. All right, so that's tomorrow. Starts off at noon with Doug. And if you don't see me here in the room, it's because I'm in there with the two of them, and we're doing the members only webinar. So hope to see you over there. All right, so if you don't see me broadcasting here, I will be in the combo room. And if you want to know how to get to the combo room, you come over here to your members page and you go to your BYOB member page right here. And instead of logging in here, you would go right over to your combo room and hit that. It would open up a room chat so you can log in and access the members only webinar live right there. It probably will be recorded. I'm going to say there's a 99% chance it's going to be recorded. And if you're looking for it after the recording, you will find it right here in e-learning replays right here. And you can see on e-learning replays, there's one from Rick, myself, and Doug. This is the last one, developing a trading plan. And on this page, you can see there's probably 10 videos for each page here. And you come down here, you got 34 pages of 10 videos. That makes 340 videos. And if that's not enough videos there, all right, on top of that, we've got the public replay, all right, and then we've got another page of 10 videos right here. And that comes down to here, and you got 20 pages there. So there's another 200 videos. So over 500 videos right there, just as for the members. All right, that's again, that's the public webinars that were recorded, and then you've got the e-learning. So you find it right here under the resources, right there. Okay, let's go ahead and get started with today's market analysis. Let's look at what happened yesterday. Let's move this down. All right, so my SPY pivot this morning, I think it's supposed to be 6. That's not the right one. We don't want that one. Give me just a second. Here we go. All right, so my SPY pivot this morning, 680.75. Above it, I'm a bull. Below it, I'm a bear. IWM did not make a new all-time high yesterday. I got to tell you, for the last 5 days, IWM has been making new all-time highs. So IWM made a lower low and a lower high. It closed inside a bullish trap over the rising 17. Diamond Dow and SPY made lower lows and lower highs, closing under bearish crosses under their 17 EMAs. QQQ closed with, QQQ made a lower high and a lower low, closing under a bearish trap under the 17. SPY closed with 2-hour downtrend. QQQ did as well. And a 10-minute downtrend. QQQ did that as well. Stinker made a lower high and a lower low, closing underneath a bearish trap underneath falling 17. Okay, we'll see if they get rescued today. This would be the place for the bulls to step in and rescue Stinker. We'll see what happens. Gold and silver made new all-time highs. USO still in an uptrend, made a higher low and a higher high. Closed over a bullish trap over the 17. UNG made a higher low and a higher high. How about that cold weather, right? Closing over a bullish cross over the 17 EMA. US dollar index still in a daily uptrend, but having a pullback. Closed near the 98.57 area. SPY max pain for today is 680 with a put to call ratio of about 0.9, just under 1 put for each call that expires today at 4:15. Remember, those index options expire at 4:15, so you got an extra 15 minutes to close those out. And those security options close out at 4 p.m. in the evening. That's Eastern time. All right, so if this is your first time seeing this page right here, these are all in daily uptrends over the 17 EMA. These are all in daily downtrends under the 17 EMA. If they got a star next to them over here, it means they're building out a bullish flag, or I call it a launch pad from which to launch higher. If they're got a little star next to it over here, they're building out a bear flag, or I call it a platform from which to dive lower, all right? So these are bullish, these are bearish over the 17, under the 17. All right, let's take a look at the market. My max pain, excuse me, that is not the correct one. That is, oh, that's way off. No, that's the futures. That's the wrong one. No wonder. Okay, so I was looking at max risk. All right, let's move this out of the way. Let me pull up the max risk just in case. See if I can find that. Here we go, max risk. See if it's the right one. And we'll know in a second here. Yep, there's max risk. All right, so we'll get to that in just a second. So for SPY, on the 2-hour time frame right here, 2-hour time frame, okay, all-time high, anchored VWAP, that's the pink line. Okay, let me give you the lay of the land here, okay? The gold line is regular VWAP, okay? Not anchored VWAP, just regular VWAP. The pink line is anchored VWAP. That's the all-time high anchored VWAP. Okay, the yellow line is the 3 EMA. The white line is the 8 EMA. The dots, they are the 17 EMA. This purple line right here is an anchored VWAP off of this present rally that we were just in and we're about to lose as soon as we take out that low. Okay, so here is the origin of that rally. So that's the anchored VWAP for the low, or the origin of that rally that we're currently in. Okay, if we take out that low, it's broken up. But anyways, there's SPY on the 2-hour chart. So here we go. We've got the 3 EMA. We got candlesticks riding under the 3 EMA right here. And we have the 3 EMA is under the 8 EMA. So that's a bearish trap. So it's in a downtrend. So the 2-hour clearly in a downtrend right there. On the 10-minute chart, okay, we've got the candlesticks riding on the 3 EMA. 3 EMA is under the white line, the 8 EMA. So we have a 10-minute downtrend coming into the close yesterday. Okay, 2-hour downtrend coming into the close yesterday. 10-minute downtrend coming into the close today. Okay, so I'm looking to trade this morning a continuation of the downtrend that we left off with yesterday. We'll see what happens. Okay, but that's what I'm interested in trading is 10-minute downtrend. So I will look to probably buy some puts and probably pick off the lows of some puts. And it will probably most likely be the 671, 670 puts that expire today or tomorrow or this Friday, more than likely. So there's SPY on the 10-minute chart. We'll see what happens. Yesterday we had a professional gap, call it a pro gap. Okay, so it's if you notice the ATR yesterday, it was about $5.80. So we had a 2 deviation gap. All right, so it gapped like not just 1 deviation, but 2 deviations and traded down to these lows. All right, so price moved. So far, it gapped right into support. So we traded it to the long side because it gapped into support. So we traded it back up, and we could not produce a higher high after reaching this high here. We stayed here for about 6 candles, and you noticed on that 7th candle we started, you see a bearish engulfing right here, and I bought puts. And if you want to see the puts, I alerted members in the room I am buying puts. I see a bearish engulfing. We're up here too long and we're not making a higher high. So you can see right here I said, hey everybody, I'm going to be buying some puts. And here is my alert for the puts. So I bought, here we are right here, SPY bidding for 670, well, no, right here. Here it is. It was at 11:30. I said bidding for 3 days till expiration, SPY puts, 275 strike at around $1.76, okay? Also bought some UVXY at the same time to double down on my 10-minute downtrend that had just started to commence. And then I sent out an alert. We're in a 10-minute downtrend, and then I started to buy more puts at about 1:30, see if I could get some more movement to the downside. And I was bidding for even more puts after that, the 675s. All right, so there we are in a 10-minute downtrend, obviously 2-hour downtrend. Now my favorite trade is 10-minute uptrend, all right, that over VWAP that resides inside a 2-hour uptrend. Well, we didn't have a 2-hour uptrend. Okay, we had a 10-minute uptrend briefly from the professional gap, which we traded in the opposite direction of the gap. So we had a bearish gap, but we traded bullish out of the gate because they gapped right into support, and it was a 2 deviation gap, meaning they did 2 of the 10-day ATRs all the way down here. So we traded to the bullish side. They couldn't make a higher high. At that point, I said, I'm getting puts. And we had a 10-minute downtrend that lasted right into the close. Now, if you look at this downtrend, most trends last 3 to 4 hours. So this one started at noon and carried on right into the close right there. SPY, 10-minute downtrend. You guys know 10-minute downtrend. 10-minute trends are my favorite. And of course, you can see you got a 10-minute downtrend under VWAP breaking the rubber band candle, which would have been this candle right here. We closed below it, so it's a broken rubber band candle. And there was a clue if that was what you wanted to trade to the downside. So we trade counter trend because the weekly chart and the monthly chart are still in uptrends. All right. So on the 2-hour chart, 2-hour downtrend, 10-minute chart, 10-minute downtrend. This morning, I'm looking to trade a continuation of a 10-minute downtrend. We'll see what happens, all right? I'm looking to buy probably some 670, 671 puts, either 0, 1, or 3 days till expiration, all right? And looking to pick off the lows of those option candles on the puts, all right? So on the lows of the option candles, not the security, but the option candle puts low. Okay, so there's the 10-minute chart, did the 2-hour chart. Let's take a look at the daily chart. You can see here's our quad lines. This would be the bottom of the quad lines. This would be the top of the quad lines. This is our April low. This is our all-time high up here. Okay, so you can see price action is made. Here's a low below the 17. We're in a downtrend because we made a lower low. See, there's a low right there below the 17. So we made a lower low. So that puts SPY in a downtrend currently, okay? But we're still all the way up here in quadrant 4. So that's bullish all right, but in a downtrend currently in a downtrend. They could recover that. We'll see what happens, all right, but there's April low, all-time high. Okay, so currently, where do I expect price to come? See this diagonal support right there, okay, kind of connect this low with this low and then stretch it out over here. Well, you got this April low anchored VWAP. You got two of them. And you can see where they're starting to converge in this area. I'm expecting price to come down there. We'll see what happens, okay? But that's where I'm expecting price to come down to. So how low is that? Well, this one resides at about 635. This one resides currently at 642. And the diagonal support line, which will be the third touch, actually the fifth touch, because 1, 2, 3, 4, 5. This will be the sixth touch. No telling if that's going to hold or not. But that currently resides at about 648 right there. Okay, so that's where I think we're coming. We'll see what happens. All right, so there's SPY on the daily time frame. Remember, as long as they stay in the upper third, we're still bullish. Okay, in regards to the quad line. So there's the daily chart. So daily's in a downtrend. We're still up in quadrant 4. All right, and so we're bullish, but we're just not moving up right now, okay? On the weekly chart, see all the green dots? We're still bullish, still in an uptrend. On the monthly chart, see all the green dots? We're bullish, still in an uptrend right there. Let's take a look at the game plan. All right, game plan, we got green erases red over. Yesterday's high would be 684.80. Okay, pivot, remember the pivot, 680.75, above it I'm a bull, below it I'm a bear, and you got red erases green down here underneath, 676.55, so below that I'm a bear. All right, so I like to trade 3 days till expiration and 10 days till expiration, Friday options on the multiple of 5, specifically for the open interest. So what's a multiple of 5? 700, 695, 690, 685. You get the gist. Okay, every $5, that would be the multiple of 5. Starting at 695, 690. Okay, I like strikes $2 to $15 out of the money. Okay, now I'm not opposed to trading zero DTEs. I'm not opposed to trading in the money options. Okay. I just prefer to trade out of the money. Now, I will not get the performance that somebody that trades in the money options. I won't get the same performance. Matter of fact, somebody that trades in the money options and price goes in their direction, for instance, in their favor, all right, they will get much better performance than I will trading out of the money because their delta is higher, okay? So in other words, for every dollar that it moves, they're going to get whatever their delta is, okay? So I won't get that performance, and I'm okay with that because I'm all about the risk, all right? So I'm all about managing my risk. So my risk for today, and I had it up here, right here, my trading is 10% of my trading account. So my account closed yesterday at 125,313. So I have $12,000, $12,500 to risk today, all right, in my day trading, all right? Now, if I happen to take some risk off, I can put it back on, but I have no more than $12,500. My daily goal is always 1%, okay? So that's $1,250 for my daily goal. That's what I got to make today to make my 1%, okay? So remember, we started this, all right, back with $30,000 back on this year on the 5th or the 2nd of January, okay? So not a bad turnaround for 21 days, almost 4x right there, okay? So again, we're trading the options, all right? Get a lot more movement, a lot more, how do I say it? a lot more participation in the options, okay? There's a lot of liquidity, all right, which makes it easy to trade. So I trade 3 days till expiration, 10 days till expiration, Friday options on the multiple of 5, specifically for the open interest, all right? I don't want a lot of slippage if I get stopped out, and I don't want wide bid-ask spreads, okay? I like my bid-ask spread to be about a penny. So for that reason, I trade strikes that are $2 to $15 out of the money. My sweet spot for me, my preferable price is I like options that are anywhere between 30 cents right on up to, you get the delta too low and you don't get any movement out of price action when it moves $1. If you get the delta too high, then it's costing you too much, because remember, I only got $12,000 worth of risk that I'm willing to use today. All right, so I got to have like a range that I like to trade, and that happens to be 30 cents on up to about $1.20, $1.40. Any more than that, I'd rather roll out to something further out of the money, because it's costing me too much to get in and get out. And I like to get more than just one option. I like to get at least 2 or 3, maybe up to 20. That way I have something to farm out when I spread out my grid of sell orders or my grid of buy orders, okay, in the option candles, okay? So for that reason, I have that sweet spot, and it happens to be 30 cents on up to $1.40, okay? You got to do what's right for you. I'm just sharing with you what works for me, all right? So you know that. So there's the SPY game plan, all right? I trade 10-minute uptrends over VWAP, all right? I like 10-minute downtrends under VWAP. If a 10-minute downtrend under VWAP happens to manifest up here long before, remember I said downtrend, long before it gets to the red erases green entry. Again, I'm not opposed to trading it up here or up here, okay? I'm not opposed to trading it. I just like to see it break that 10-minute bearish rubber band candle, okay? That's what I'd like to see. That way there's no threat of price returning back to VWAP in the immediate near future, okay? So again, I trade 10-minute uptrends, and if one were to manifest down here, okay, I'm not opposed to trading it. Again, I'd like to see it break that 10-minute bullish rubber band candle, all right? That way the threat of immediate reversal back to VWAP has been flushed out, and I'm willing to take that trade. Okay, so if they happen to manifest down here or under the pivot, I'm not opposed to trading them long before they get to the green erases red entry up here. Okay, I'm just want to see them break that 10-minute bullish rubber band candle, all right? So that the threat of price returning back to VWAP and stopping me out, it does not has been extinguished for the most part. Okay, so there's the SPY game plan. Let's take a look at QQQ. QQQ got a game plan as well. I'll share it. SPY QQQ pivot 610.80 above it. I'm a bull. Below it, I'm a bear. Red erases green entry. All right, price below 607. Green erases red entry. Price above 615. Notice we gapped down in SPY and QQQ. Bearish gap down, and the bulls did not fill the gap. That shows a little bit of weakness on their part. Maybe they'll try to get it today. We'll see. All right. Again, pivot 610.80. Above it, I'm a bull. Below it, I'm a bear. I trade same thing on QQQ. 3 days and 10 days till expiration. Friday options on the multiple of 5, specifically for, you got it, the open interest, right? I like a lot of liquidity. All right. I don't want to have to pay more than a penny spread when it comes to getting in and getting out or getting stopped out. So I like that high liquidity. I like strikes $2 to $15 out of the money. Like I said, I'm not opposed to trading 0 DTEs or in the money options, okay? It's just that I only have so much to work with, so I like to trade out of the money options, and therefore I have less risk on the table, okay? Again, I don't get the performance that an in-the-money option will have. An in-the-money option will probably make much more per dollar of movement in the QQQ because the delta is higher, all right? So I trade 10-minute uptrends over VWAP, 10-minute downtrends under VWAP. Again, if a 10-minute uptrend happens to manifest down here, same rules, okay? Not opposed to trading it. Just like to see it break that bullish 10-minute rubber band candle. Same thing goes for the downside. If one were to manifest up here long before the red erases green entry, not opposed to trading it. Okay, just like to see it break that bearish 10-minute rubber band candle. All right, let's go take a look at QQQ on the daily chart. Just like SPY, gap down. So lower high, lower low, closing underneath a bearish trap. Underneath the 17, that would be the green dots right there. Underneath the pink line, remember the pink lines are the all-time high anchored VWAPs. All right? And we've got a low right here below the 17. We made a lower low, so we're in a downtrend. We're still up here. Here's our April low. We're still up here in quadrant 4. So we're still bullish. As long as we stay in the upper third, we're still bullish. We're just not moving up. We're moving down. We're in a downtrend now, right now. There's QQQ. This could be a pullback, all right? That's the daily chart, 2 hour. You can see the candlesticks riding under the 3. Okay, the 3 and the candlesticks are riding under the 8. So we got ourselves a 2 hour downtrend. Notice the 3 is pointed down. Notice the VWAP line, that's the gold line, is pointed down. And the 8 is pointed down. And if you look at the 17, that's the red dots now. Okay, the red dots are pointed down. Okay, and we're underneath, you got it, the pink line, that all-time high anchored VWAP. 2 hour downtrend. 10-minute chart. Again, you can see the candlesticks in the 3 riding underneath the 8, 10-minute downtrend. I'd like to trade a continuation of the 10-minute downtrend. Remember, most trends last for 3 or 4 hours, and this one started at noon, so I posted in the room there is a really good chance that this 10-minute downtrend rides right into the close, and it did. Okay, not always right, but that time worked out nicely, okay, on QQQ and SPY. So 10-minute downtrend. Again, on QQQ, I'd like to trade a continuation of that 10-minute downtrend. Don't forget the 2 hours in a downtrend as well, okay? Now, on the daily chart, remember we're in a downtrend over here because we made a lower low, okay? On the weekly chart, still in an uptrend. So on the bigger time frame, we are still in uptrends. Nothing has broken yet. Okay, see all the green dots? Weekly is still in an uptrend. Monthly, see all the green dots, is still in an uptrend right there, okay? Like I said, the bulls could step in and rally price back up there. I don't know. We'll see. I don't want to get ahead of myself, but we'll see what happens. What will inspire them today? Maybe SCOTUS will come out with a tariff reform act. I don't know. We'll see. And that could rally price up, telling POTUS that, can't do the tariffs anymore, all right? So, of course, that will probably rally price all the way back up there. We'll see. So there's QQQ on the monthly chart. Back to the daily chart. We're going to check out IWM. Now, for the past, well, you can see all these days right here. So we had like 5 days of price on the IWM, making new all-time highs. Remember, this is the Russell 2000. That's a much broader index than the NASDAQ 100. That's only about 100 securities. The Russell 2000 has about 2,000 instead of 100 like in the NASDAQ, or the high cap 1,000 that only has 1,000. Russell 2000 has nearly twice as much. Okay, so much bigger picture on the broader. So it wasn't but a few days ago we were making new all-time highs, a few trading days ago. So, you never know what the bulls have in mind. They might be wanting the bears to just work out some of that tension that they have, all right, from not winning for a long time. Give them a little bit and then come back in and rally it back up. We don't know. We'll see what happens. IWM, lower high, lower low, closing in the bullish trap. Okay, so that's a bullish trap, in the bullish trap over the prior all-time high right here. Okay, not the new all-time high. Over the 17 EMA. See the rising green dots? Rising 17 EMA. Again, top of quadrant 4, so that's bullish up here. Here's our April low. This is the origin of the rally. That's bullish and in an uptrend. Okay, that's IWM. So the Dow Jones has about 30. The NASDAQ has 100. The S&P has 500. Okay. Now let's check out Diamond Dow. All right, Diamond Dow still at the top of quadrant 4. Still in an uptrend. Okay, we haven't made a lower low. This will be the first one below the 17. So still in an uptrend on Diamond Dow. Lower high, lower low. Closing underneath a bearish cross. Underneath a rising 17. Okay, still in the top of quadrant 4. Here's our April origin, our low. Okay, so that's still bullish. All right, and still in an uptrend right there. So you got IWM and Diamond Dow still in uptrends right now. Okay, so we already did QQQ and SPY. Let's check out Stinker. All right, Stinker got lower high, lower low. Okay, this is a basket of the 10 of the probably most weighted securities in the QQQ and the SPY, okay? That means when these guys move as a pack, they can drag those indexes right along with them. And you can see it's been a while since they've made a new all-time high, all the way back in late October, okay? This pink line is the all-time high anchored VWAP. Okay, so you got Stinker here, lower high, lower low, closing underneath a bearish trap, underneath, see the red dots, underneath a falling 17, making their way all the way back to the midpoint, all right? This would be, above this would be bullish, and below this would be bearish if you were just to use a binary, a binary direction or bias as far as bullish and bearish, okay? So there's the midpoint. So whenever you got 51% of anything, you got the majority. Well, clearly the bulls have more than 51%. So this would be bullish if you were using a binary bias, all right? But for me, I like them in the upper third. That's when I determine that they're bullish. We're not in the upper third. You can see that clearly. Okay, we've never been in the upper third for at least 2 or 3 weeks now. So we got a lower low and a lower high, closing under a bearish trap under the 17. So we're just neutral in here. Okay, lower third is bearish, upper third is bullish. Neutral and in a downtrend because we keep making, there's a low below the 17, lower lows, all right? So that means we're in a downtrend. We'll see if the bulls will rescue price today. Today would be the day, all right? If not today, tomorrow. So maybe put in a doji today and then a big green bar tomorrow. I don't know. We'll see, all right? I don't want to get my hopes up because, I don't want to cast any bad wishes or ruin the juju. You know what I'm saying? All right, so there's FNGU, all right, in a downtrend. All right, let's take a look at gold and silver. Silver, new all-time high yesterday, okay? Drop the mic. It doesn't get any better than that, okay? So that's obviously bullish and in an uptrend. It's hard to make new all-time highs when without being in an uptrend and bullish, okay? Just saying, all right? So here's the 2022 low. Let me zoom all the way back here. This is the origin of the move, right back here. Kind of a rounded bottom there. It's Probably the reason why Rick and Doug trade those rounded bottom breakouts. Okay, those are my compadres. Okay, so new all-time high all the way up here at quadrant 4. So bullish in an uptrend. Gold, kind of the same deal. Okay, new all-time high. Drop the mic. It doesn't get any better than that. All right, so again, back in 2022, the origin of the move, that rounded bottom right there, that my compadres also trade, okay, to the upside right there. So bullish and in an uptrend. Let's take a look at UNG. So we got some cold weather, so UNG gets a nice snap. Beautiful. Higher low, higher high. Look at price now. Even further. Looking like it's coming back to the pink line. Higher low, higher high. Closing over a bullish cross over the falling. See the red dots? 17 EMA. In the bottom of quadrant 1. So it's still bearish on the daily time frame. Still bearish on the daily time frame. They haven't made a higher high. They're dangerously close to making, see this high that pokes through the 17? They're dangerously close to making a higher high today. We'll see, all right? That would put them in an uptrend, okay? We'll see what happens, okay? Still in a downtrend. We won't know until they close today, and I see all of today's price action. So quadrant 1, all right? So if quadrant 4 is bullish, quadrant 1 is bearish. Remember, the lower third is bearish for me. So here's the 2025 high. It's about 12 months ago. Call it 11 months. All right, and here's the anchored VWAP, that pink line that comes off that high. That is nowhere near the all-time high. If you want to see an all-time high for UNG, yeah, we're way off the all-time highs, like 8,000. See that? Okay, way off. Like, okay, so back to the daily chart. All right, so you can see over the bullish cross because the 3 crossing over the 8. Okay, so we're still bearish. We haven't busted out of the lower third yet. We're still bearish and in a downtrend unless we bust the top of that high. Let's see what that high is. 1368. So they will have converted this to an uptrend on the daily time frame. All right, let's see if they can hold the higher ground. Okay, we've been up here before, and you noticed we failed to hold the higher ground. Okay, this is like we've been here before, and we couldn't hold the higher ground. And what happens? We make a lower low. All right, so we'll see what happens. All right, so there's UNG on the daily time frame, starting a new uptrend early this morning, not yesterday. Early this morning, still in a downtrend as far as yesterday's standards go. Let's take a look at USO. Higher low, higher high, closing. See, there's the bullish trap, 3 on top of the 8. Remember, the 3 is the yellow line. Over a bullish trap, you can see daylight just barely. If you squint, you can see daylight between the yellow line and the bottom of that body of that candle. So closing over a bullish trap. Over, see the green dots rising over the 17 EMA. Okay, so not in the upper third. We'll zoom way out. Not in the upper third, not in the lower third. So just neutral, but in an uptrend. Let's see if they can hold the higher ground. Okay, notice failure to hold the higher ground. Just a melting off right there. So now they're in an uptrend. Again, they lost it here. They gave it up here. They gave it up there. We'll see if they can do it. All right. Got to hold that higher ground. Okay, so there's USO on the daily chart. Let's take a look at our technicals. T2101, we came down yesterday. We lost market. Substitute the word participation for breadth. All right. So we lost participation. I like that. I don't want to see it increase. I don't want to see everybody piling on when price is coming down, okay? That would be a very bearish sign. I like to see it when participation dips if the market dips. So for me, that's a bullish sign right there. Okay, dipping is not a bullish action, but that's a bullish sign that participation decreased while price was pulling back. So there's T21.01. T21.22. We were up in the buy zone. All right. Well, we're up in the overbought zone, and then we made a lower high. All right. So we were up in the buy zone. Okay, and then we went airborne, like the bears just like put a foot out there and kicked us clearly all the way down here, almost to the sell zone. All right, a little airborne right there. Okay, so we spent the day in the seller's chop zone, and that would be the bearish side if you were a binary bias trader. This would be the midpoint. All right, right here, this big gold line. So we're obviously below the midpoint. So that would be a bearish outlook or a bearish bias based on we're below the midpoint. So we meandered and chopped around all day inside of the seller's chop zone. Okay, again, making a lower high, another lower high, and you can see the low. We made another lower low. Okay, so this is bearish on T21.22 15-minute chart. Let's take a look at T21.23. Well, for the past 7 days, just like IWM, T21.23 has been making new all-time highs. Well, maybe for the past 5 days. Okay, so yesterday, they failed to make a lower low. All right, they made a low. They made a higher low. But they didn't make a lower low. Doesn't look like it anyways, according to the crosshairs. I can still see daylight between that crosshair line and the bottom of that price bar right there. So we're still in an uptrend. But if they trade any lower, we will have a downtrend. All right, so T21.23 15-minute chart. This is the all-time high right here. Right here, that's the all-time high. That was made on Friday. Right there, that's the all-time high. So you can see prices up over a rising 200. Okay, that's where I want to be if I'm a bull, is up over a rising 200. So this is bullish still. All right, and the fact that they're moving over to the right as opposed to dropping back down immediately is still bullish. So this is still bullish up here. Okay, that's the all-time high. So there's a 15-minute chart, T21.23. That's still bullish and in an uptrend right there. Take a look at the 3-bar chart. Okay, this is the same product. All right, here is the April low. There was the previous all-time high right here. Okay, and this was the prior all-time high. So this was the previous. Well, this is prior to the previous was this one right here. Okay, so you can see we made new all-time highs. That was the previous all-time high. There's the new all-time high right there made on Friday. Okay, so clearly you can see the quadrant lines. Okay, this is the April low. Bullish and then an uptrend still. Okay, remember we haven't made any lower lows yet, so we're still bullish and in an uptrend. Again, you can see us over the flat 200 SMA. Again, if I was a bull, that's where I'd want the price to be. Okay, you can see we had a prior head and shoulders here, and they decapitated the head by negating the head and shoulders pattern. In other words, price traded up over the head, therefore negating the head and shoulders pattern. Okay, so there's the April low. Okay, almost looking like it's going to roll over with this bearish head and shoulders pattern, but no, they could not break the neckline, and price runs off and makes a new all-time high at that point in September. Okay, then we have a pullback to right back to the neckline. All right, that would be the upper third. See why I like the upper third? So they pull back to the bottom of the upper third. See right there, that's the neckline. And then they produce a bounce, all right? And price bounces back up over the flat 200, consolidates All right, so whenever you see something, you'll hear me say, I want to see it get up on this and consolidate over the support area, okay? For me, that's a bullish environment. Trading underneath the support area, not so much. This is much better, all right? When you're up on top of that support and you're trading up. So you can see they consolidated and like the measured move, they moved up, over, and then back up again to produce a new all-time high. And if you look back at my previous videos, I talk about this very often, looking for a measured move up here to make a higher high. So there's 3-bar chart, all right, on T2123. All right, here's Stinker yesterday. Obviously, there's a low. We made a lower low, and we even went lower. If that's not low enough, we went even further. Okay, and then in the post-market, pre-market, yeah, we're still going lower, okay? Not a good sign. And if you remember me talking about this gold line, which was once green on my previous videos, if we break through that, we could see some falling apart in the market, all right? And I talk about 650, and I talk about 640, and I talk about 600. I even think I mentioned 550, all right? So here's price. Again, on Stinker, 15-minute, in a downtrend, obviously, okay, making lower lows, okay, underneath the falling 200, so that's bearish and in a downtrend. So here's the all-time high. Let's put the quad lines on there. Okay, this is the 15-minute chart, not the daily. Okay, so that would be the high, that would be the origin of the move lower, and you can see we're at the bottom of quadrant 1, so that's bearish, and you can see we're making lower lows and in a downtrend right there. This is Stinker, all right? Let's go take a look at the economic package. Running out, my breath is, my mouth is getting parched. Start off with the dollar, okay? So I'm going to zoom out. And let's see if I can drag this down. This is the 2025 high right up here. See this crown? See, you got a left shoulder, right shoulder, and then a head up here in this crown. Okay, so that was the high of 2025. So we traded lower, and this was the low to beat, and we made a lower low. See right there? That was the low to beat, this low. All right, so we made a lower low, so that's a downtrend. Okay, in the daily chart, see us making a low, and then we make a lower low, and then we make another lower low, then we make another lower low, and then we took out this low. So we're downtrend. Now we're in a bear flag moving over to the right, and inside this bear flag, we have a daily uptrend. Okay, remember that was the 2025 high that was made in January of 2025. So this is 12 months later. We're in a big bear flag, and we're in an uptrend, but we're only in an uptrend because price, see this high right here, made a higher high. So you got a high right there, price made a higher high, so we're in an uptrend. So in this uptrend, we're having a pullback, okay? If the pullback happens to go below this valley low, all right, see the V valley low, right here, they will negate the uptrend and convert the downtrend. Okay? Remember, this is a big bear flag. Okay? Double top here. There's the single top. There's the double top. Okay? So we'll see what happens. All right? So for us, as consumers, this is the strength of our dollar. So a weak dollar sucks because our money doesn't go, our paychecks or our distributions, I don't know how old you are, don't go as far as they used to last year, okay? In other words, everything costs more, okay? It's going to take more of our dollars to buy the same things we used to buy, all right? So we don't like a weak dollar. We like a strong dollar. But as market participants and traders, we like a weak dollar because that means more foreign countries can afford our goods and services. Remember, they have to convert their currency over to ours to pay us. And if we have a rich currency, in other words, a well-backed currency, all right, it costs them more of theirs to buy ours, and therefore it makes us not as competitive, all right? But when we have a weak dollar, we are able to compete with other countries for business in foreign soil, all right? Because our goods and services don't cost as much, all right? And when we bring in more money from access to foreign markets, all right, that increases the top line, which then in turn, if management's got their act together, increases the bottom line, and that means more earnings per share, and then you get what happens with what we call price accumulate, well, price increase, all right? And hence, we go back to T2123 making new all-time highs. You see that? See how it all works together? The macroeconomics and the markets making new all-time highs. Okay? So that everything works together. Okay? Just wanted to point that out so that you can piece it all together on watching the dollar and why it's important to watch. All right, so max pain for today, 680. All right? Put the call ratio, that's for SPY options. 680 is max pain today, supposedly. All right? Put the call ratio, 0.9 puts for each call that expires today. Economic calendar, what do we got going on today? We've got MBA mortgage applications at 7, housing starts and permits 8:30, construction spending, that's a delayed report. All right, so from some prior week, it's coming out at 10. If we didn't give you one construction spending, we're going to give you another one. All right, so another delayed report, also at 10. So you're going to get two at the same time. Okay, they're going to double down on the construction spending reports. Pending home sales index, okay, coming out at 10, and that's it. Light day today, really light day. Tomorrow, all right, we're going to get GDP, but keep in mind it is a delayed report at 8:30 in the morning, okay? I don't know if the markets will use it to provide more volatility to the markets or not. Remember, it's a delayed report. So we'll see it 8:30 tomorrow. Jobless claims, that would be the headliner for this week, is the GDP report, the delayed one. All right, so jobless claims come out at 8:30, as well as GDP, and that's on Thursday. Personal income and outlays, another delayed report, two of them. All right, they're going to double down on the delayed reports at 10 o'clock, all right, on Thursday. And then you've got the petroleum report at 12 o'clock right here. And we're going to get the natural gas report at 10:30. Friday, PMI composite flash, 9:45, consumer sentiment at 10. Okay, earnings report. So Netflix reported last night. Okay, so see, Netflix last night. Let's just go see what Netflix is doing. Okay, just for kicks. All right, let's just go see. NFLX. Okay, so we're going to go with the hourly time frame. Actually, we're going to hit that one because it's got some pre-market. So obviously, the people and the holders of Netflix did not like the results of Netflix. All right, remember, it's all about subscriptions. All right, and you can see big move down. All right, they can be a market mover. Okay, so looking for, again, that 10-minute downtrend, continuation of the 10-minute downtrend in SPY. This is I'm looking at Netflix, and it's one of those ones that can drag the market along with it because it's a big boy with a lot of market cap sometimes. All right, again, that can drag the market with it. All right, so looking at a continuation of the SPY 10-minute downtrend. Just wanted to share that with you. Okay, so that's Netflix. They reported yesterday, 370, so $1/3 of $1 trillion. Okay, 3M company, again, more familiar names yesterday reported, but nothing market moving like Netflix. Okay, Wednesday, we got J&J, $500 billion right there. Charles Schwab, $184 billion. Prologis, $123 billion. More familiar names, okay? None of these really seem to be market movers, all right? Not really, all right? Never seen Johnson & Johnson move the markets or Charles Schwab. Maybe during COVID, Johnson & Johnson, but it'll be another century before we get something like that again. Okay, probably. I'm hoping. GE Aerospace, $1/3 trillion. They're coming out on Thursday. That's tomorrow. Okay, and then we got Procter & Gamble, another $1/3 trillion. All right. Also, again, one of those ones, no COVID, so not real big jeopardy of Procter & Gamble moving the markets. Okay, GE Aerospace, that's a defense contractor. Okay, they could probably move the markets. Not so much, but we'll see. Abbott Labs, $200 billion. Intel, that will be a market mover. We're always watching. If you want a robust rally, you want semiconductors, you want industrials, and you want financials. All right? And Intel falls inside the semiconductors chip space. Okay? So all eyes will be on Intel. That will probably have more impact than the three of those combined. Okay? Because it's such a big player when it comes to robust rallies in the market. So there'll be more focus on Intel than probably anything else, all right, is to see what the chip sector is doing, because they are a leader in the chip sector. I think they're a dominant player, in other words. Intuitive Surgical, I'm not even going to guess. I would say medical parts, $189 billion, Capital One, $152 billion, okay? That's tomorrow, okay? But I think all eyes will be on Intel. So keep an eye on Intel, all right? That will be what the market's looking at, because if that's not good, then you can see they didn't like the financials, all right? Seemed to be a mixed bag. They did like Goldman Sachs, but they didn't like J.P. Morgan Chase, so we'll see what happens, all right? So that's Thursday, that's tomorrow. Friday, we've got Schlumberger. A lot of familiar names, but nothing market moving here, okay? Familiar, okay? First Citizens Bank, you can see right there. Schlumberger, Ericsson, all right? They're big companies. You know, I'm not putting them down. They're just not enough market cap to move the markets, all right? And that's what we're all about when we trade the indexes right there. Okay, so this is, well, almost an hour. I'm sorry, all right? But got a lot of information, want to explain it, because we've got daily downtrend now, okay? Some things are moving around, and I want to explain why they're moving around, okay? So I'll see you guys in about 20 minutes, and we will open up the markets here when we look at the pre-market, all right? And I will open up the markets with you in about 20 minutes. Thank you.